Hello, hello. Thanks for tuning in and good morning wherever you are, maybe in Europe or in the US, or if you are in China. I also welcome you. And please let me know in the comments whether or not this live stream is currently working for you. Because, yeah, I'm actually right now traveling and on the road, so I'm not at home. The internet could be a little bit bumpy in this session. I hope everything will be working. Let me know if it works. And also welcome to everyone who is viewing this live stream later on as a recording. And well, in this live stream, I will be talking about the Q2 earnings by NIO. Let me just quickly check on the cell phone. Yes, seems like everything is working so far. After going through the numbers, the report that we just gotten, I will be taking some questions, so please leave them in the comment section. And after this session, if everything's working out here with the internet and so far, then I will also consider doing a second session in which I will be live recording and commenting on the NIO earnings call. So what I've opened here is kind of, the headlines, so the big numbers, the big headlines here. NIO misses the earnings per share, reported minus 20 cents, and that's a miss by 2 cents. And then revenue is 1.54 billion, and that's a slight beat by 120 million. And actually, yeah, you can see already, I think, in pre-market, what is it? It's now down almost 6%. So NIO does what it always does after earnings. It's selling off. But let's dive a little bit into these numbers. Like, what do they mean for NIO? Are they good? Are they bad? And what insights is the company giving us? Well, first of all, I would say what we've been all kind of looking for is the Q3 outlook, I guess. So we have coming in of the deliveries of 31,000 to 33,000 for the Q3 outlook. And while the numbers in this earnings report are kind of backwards looking and should be kind of priced in by now, hopefully, then the forward-looking outlook is much more important because obviously NIO was challenged with slower growth recently. Growth numbers have been stagnating. And so how do those 31,000 to 33,000 deliveries actually play out? Let's have a look at my Excel sheet. I already updated some of these numbers here. And yeah, first of all, I already ended like the high guidance here of 33,000, which would translate into roughly more than 12,000 deliveries during September if you take the July and August numbers that we already know, right? So I think this is actually a quite good outlook and guidance. Because, yeah, this should be quite solid growth going forward into the Q3 quarter, in which we're kind of still in the early innings of the ES7 and the ET5 ramp, right? So the larger numbers should be expected in Q4, obviously. But let's go back to the financials and dive into this earnings report here. Lots of the stuff, of course, we already know just from the deliveries. And so the vehicle sales at roughly 1.4 billion are not a surprise, really. What is possibly a surprise here, and I've highlighted that one in green, if you can see that. Let me just zoom in a little bit more. Both the vehicle margin and the gross margin. And they're not great right now. So they're dipping. They have been better in the second quarter last year when they've been around 20%, and also better in the last quarter, 18.1%. And now the vehicle margin is just coming in at 16.7%. So that's obviously not good news. That means like on each car NIO is selling currently, they're earning less money going towards their other cost. And this, I think we have some explanation here for the vehicle margin in this report, but certainly we're going to get more information also during the earnings call, was mainly attributed to the increased battery cost per unit. So we already saw this kind of coming in the last quarter because NIO was already fighting with that issue, with the inflationary pressure on the supply side of things in the last quarter. But yeah, they kind of indicated that this might actually get even worse in the second quarter. And also you need to know that, of course, we had also the issue around the lockdowns and all of the shutdowns in the second quarter, which is only being reported now. So it was kind of to be anticipated that these numbers wouldn't look pretty. However, they are not pretty, right? These declines in the margins, that's not what investors like to see. The same thing actually for the gross margin, which is only at 13%. Previously, it was 18.6%, so that's last year, and 14.6% in the first quarter. Same story here, more pressure on the gross margins. Let me see here, they have attributed that to the reduction in other sales margin and the expanded investments in power and service network. So this was also kind of the question already in the last quarter, like how and when would they book all of the expansion for the battery swap stations. Let me just jump in quickly into my KPIs here. So we have the battery swap stations here. I'm tracking them. So let's see, in Q1 this year, they had 884 battery swap stations, and that was an increase of 107 new battery swap stations coming from the Q4 2021. Then in Q2, they ended the quarter with 997 battery swap station, another increase by more than 100 battery swap stations. And my suspicion was already that, those build out, which was the highest one actually in Q4 2021 by the numbers, would kind of trickle down a little bit later in terms of cost, because usually they should have maybe contracts with some of the suppliers which they are building it. So maybe 90 days payments and things like that. So over time, we will see that those kind of costs for building out the infrastructure will kind of trickle down. However, we also could see that there was kind of a peak in Q4 in the number of new added swap stations, and it's now becoming more gradual. And I think if I go into Q3, I haven't done those numbers yet, it's coming down even a little bit more. So the numbers of battery swap stations currently building out is coming down, and so should be the cost maybe for that associated in the next couple of quarters. However, you also should see the bigger picture for NIO, which is of course to build up to 4,000 battery swap stations also overseas as well, in total, right? So some of them overseas, I think up to 1,000, and most of them being in China. So these costs, they need to happen at some point in time. There will be peaks. I think the peak in last year is to be explained if kind of preparing that there isn't too much demand on the battery swap stations that are currently already in place. Plus, battery swap stations also kind of serve as a sales vehicle. So people are watching people swapping batteries. People are watching swapping the batteries being swapped, and people who are waiting and charging their cars, they see what's going on with NIO there. So these are in a way also an attraction and helping NIO to build out sales. So I think of course, the bigger goal is anyways to build out this infrastructure and network, and that's also one distinction of NIO, that they have an advantage there in terms of being actually an infrastructure supplier in comparison to, let's say, for example, BMW, Audi, Mercedes, who are not building their own infrastructure, at least not in China, maybe in collaborations in Europe. But NIO, aside from Tesla, is really the only company who's doing that in a significant manner. And of course, this means upfront investment. And yes, this is showing in the numbers here in gross margins, and in general, also in some of those operating expenses, I would say. However, at some point in time, NIO sales should be big enough to cover for such costs. And of course, at some point in time, the build out will be finished or going at a slower pace. So the idea is, of course, that this will be at some point, kind of paying for itself at a later point. But this is not where NIO currently is in the stage of development. They're currently still scaling and building out, having upfront costs, which are now really showing up also in their financials, right? So these are some of the negatives here, the vehicle margin and the gross margin. And obviously also then, if we look at the loss from operations, it's getting higher, as well as the net loss, it's also significantly higher. The analysts have kind of anticipated some of those higher costs, but as you saw also in the headline here, they have been still slightly higher by this earnings per share metric than the analysts have anticipated. So going forward, personally, I'm expecting that these numbers should get better again on the margin side. Now, if the new factory is in place, if also the ET5 and the ES7 are gaining some more traction, and also those higher volumes are actually helping also to distribute some of the cost on the battery purchases, and also inflation coming down again, I would say, well, it's maybe too early to call this the bottom for the margins here, but I'm expecting them to gradually recover. And the goal is, like, once all of the models are actually on the new NT 2.0 platform, management has indicated that they can ultimately reach 25% margins there. But this will take some months, some quarters even to do that. And certainly we're seeing right now the impacts of all of those expansions that NIO is doing there. Speaking of that, there is also more expansion in terms of R&D. So here NIO is spending 320 million this quarter, which is also again an increase for what do they say here? Increased personal costs in research and development functions. I mean, we've been seeing that NIO's been hiring like new positions in Munich, in the US, actually, in the UK, also in China, mainly maybe for software and autonomous driving personnel. So they are spending heavily there in these areas, also in R&D for battery technology. So we'll see how sticky kind of these research and development expenses are, which part of it is actually like one-time payments, which of these are people on the payroll that will be going forward, be employed in these areas and contribute to higher cost. Also, selling and general administrative expenses have been higher here, and mainly attributed to personal costs again, and marketing and promotional expenses, and then naming here also the launch of the ES7. So we could also see similar marketing expenses possibly going forward for the ET5 launch. So maybe they do influencer events, they do marketing campaigns. Some sort of these costs will be showing up in the next quarters as, let's say, significant expenses that are incurring whenever new models are being launched. So that's also something which I think is quite understandable here. However, like if we go into the income statement here and compare it, so these are the actuals between, let's hide this one for some more clarity. So this is comparing Q1 and Q2, and you can definitely see, let's say, for some of those expenses here, research and development has once more increased, now booking more than 300 million, and also the SG&A are still going up a little bit. So we'll see where this actually is panning out, and ultimately, if they are sustained at a higher level, of course, they need to be compensated with more sales. But this is once again where we have some positive outlook here with the 31 to 33,000 vehicles, and that's also an increase in the roughly 30% range here, and that's finally showing that NIO is getting traction again after from Q4 2021 till Q1 2022, and then with the lockdowns in Q2 2022. these growth numbers were certainly not there where you would expect a growth company, a startup like NIO to be. But of course, in an environment where Shanghai was on lockdown, partially the shutdown, and then what's coming on top of that for NIO is launching new models like the ES7 and the ET5. And I've been talking about how they must be scrambling with dealing building so many models in just one factory right now before the launch of the ET5 in the new factory, which will have a dedicated factory, dedicated line. So that must put lots of complexity and pressure, and we can clearly see that in these financials. And so I would say these are not pretty financials, to be honest, but they are fitting the current stage where NIO is at. So this is not for once a profitable company right now. It's also a company that is currently spending more and more in order to open up new markets, open their product lineup, creating new models. So this, you should kind of think about this like these are investments into the future. And the critical thing to ask is whether or not they will be managing to sell their models in the future. Because if that is going away, if the ET5 and ES7 is not like really a kind of a success, then of course it would get problematic. However, I also checked again the cash balance here. Looks very healthy at $8 billion in cash. So there is, in my point of view, currently not a big risk that they need to raise new cash. Even at the current burn rate, it seems to be fine, indicating profitability around 2024, 2025. I think possibly we have a good chance that this cash should be sufficient if they now manage to turn around with the ET5 being hopefully the driver of growth and working more towards the bottom line of the business there, paying for some of these expenses. That would be the ideal scenario. And so I think, difficult quarter for sure. Hopefully getting a little bit more of flavor from the management, more explanations. Let's see what the analysts will be asking on the call, and I will be live streaming that one as well, as far as my call is still working here with the internet connection. And to also put this maybe a little bit into context here, we also had already the reports by another EV startup, Xiaopeng, here, and also Li Auto, which is not a full EV company, but more in the range of where NIO's products are priced, but targeting a more similar segment, also more families, more the affluent users. And they have been guiding, where is it here, between 27,000 and 29,000. So NIO is already guiding higher for the Q3 deliveries, while we will still not have actually the ET5 ramping really in those months. So this is actually a pretty good, and in my point of view, a pretty healthy outlook here, and I'm happy with that. Also, yesterday I actually posted the first week September deliveries, and I don't have the exact dates. Like, I think these might be the 1st of September to maybe the 6th, like yesterday, or maybe even less. And I should say not deliveries, but sales numbers. Sorry, not deliveries and sales numbers, but actually license plate registrations. These are the numbers that are being leaked by some Chinese bloggers right now, indicating that NIO is currently in the first week already delivering close to 3,000 cars, and notably higher than XPeng and Li Auto here, which they usually haven't been, because of course NIO is not producing those cheap vehicles like XPeng, for example, is doing. And this number is relating pretty well to the end of last week in August. So it seems to be that NIO is keeping the traction here, and it's certainly higher than the first week in August. So it seems to prove that NIO is certainly right now on a path to actually meeting those outlook numbers here. I mean, of course, they might come in also lower at 31,000, which would be a lower monthly number. But usually in the past, we've seen that NIO the numbers they're guiding, they're usually beating them slightly, right? So of course they know already the orders, they know the delivery plans, and so they should be quite confident about these numbers again. And then that's nice to see already pushing through the 2 billion quarterly revenue numbers there. Of course, one thing we have to watch is the US dollar. So I think that's also certainly putting some pressure here on some of these results, because NIO is only earning those revenues currently in renminbi, the Chinese currency, and need to convert them in US dollar for the reporting here. I think that's also one of the issues why actually they have been, been scaled, not holding up so well in this difficult market right now. All right, that's it for the numbers right now. So all in all, I would say challenging, tough quarter. We kind of knew that with the lockdowns. There's not too much explanation and flavor during in this report. I think we should get more in the earnings calls. But now let me go through some of your questions here, because I couldn't see them before. Thank you, Andrea. Yes, guys, please hit a like and share it. I appreciate I'm appreciating that a lot. And let's get into some of your questions here. Exactly, the RMB is weak. That's something that I've just mentioned. Denista is mentioning a big overreaction in the market. Well, I think NIO has been usually quite challenged in pre-market whenever earnings occur. It's also usually selling off quite heavily after earnings. And as I mentioned, like they haven't beaten estimates on the bottom line, like the earnings per share. So I mean, there's reasons for that, and the margins are lower. There's negativity in the report if you want to find it. But as I mentioned, like I'm rather looking on the long term, and also even if you look in the shorter term, I do think that actually margins will recover. The revenues should be growing again more than previously. Hopefully, most of these things are now in the back mirror. So. Let's see, investors should be smart and savvy about that as well. The ET5 is going to be the Model 3 moment. Could be, yeah. And actually, I remember being invested in Tesla and the Model 3 ramp. Actually, it took more than a quarter, I think, for investors to really cherish and value the Model 3 ramp, even after Model 3 was starting to sell and maybe selling even better than expected previously. Still, the stock price was actually doing not so well and tanking further. So, the market isn't always the company, right? So the stock price can fluctuate around those things. But if you are cost averaging, that's what I'm usually doing. And if you're having a long-term outlook, and if you think that the fundamentals of the company are intact in terms of like the product, is that one sexy? Is the price of the cars good? Do you think there are buyers for NIO cars? Then this should kind of form your long-term thesis there. However, in the short term, if you're a trader, of course, there is lots of volatility, lots of negativity also in the market right now to trade around. Here's another point. It's NIO Park, and NIO does not own it. You're correct about this. NIO is not owning NIO Park. They are doing this once again in joint collaboration with JAC, a state-owned company. And this is kind of the business model of NIO. They are not owning the factories, similar to kind of a Apple-like setup in which they are working with a partner like Foxconn is developing the Apple cell phones. NIO is working with JAC so that they are manufacturing. They have contracts with them. They have also abilities to improve production. So some of the tooling and equipment is actually purchased by NIO. They have a dedicated team in the factories working with JAC closely, and so they have also ways to improve margins. They have ways of finding scale and also improving those metrics. However, NIO is just a different company also in terms of a setup on the business model than Tesla, let's say, which is riding down declining cost curves in terms of improving the margins dramatically by really using like low cost input, also looking to have really a big scale in ramping up a few number of car models, like just the Model Y, Model 3, right? And the X and S are not playing a huge role right now anymore. So that's a different setup there, while NIO is focusing more on some of their other key competitiveness and activities, which is more around design of new models, also designing all of their ecosystem services, which they are ramping in terms of NIO Life, NIO Houses, e-commerce activities. By the way, I think the other sales in this report haven't been growing as much as we would possibly like to see. I have to crunch the numbers again. I think ultimately I'm still hoping that NIO Life will at some point in time be a good contributor to the NIO bottom line there with higher margins and some of those products that they're selling currently. I think it's not showing up too much, this line, because it's actually not big enough. I also saw that they're now explicitly showing a vehicle second-hand sales for vehicles, and also what's it called? Let me look into the line again. The sales. They explicitly name financing services, sales of service and energy packages, and sales of used cars. So that's something that they previously haven't reported in this line, and that's interesting going forward. Maybe we even heard something about this in the earnings call. What's the outlook and prospects of this business segment? Exactly. This question is referring to it. Is NIO Life growing with the increase in user base? Exactly. That's, I think, what will be happening in the future. Right now, this number is maybe still too low in order to be significant. And as I just mentioned, it's not very explicit of how they are reporting it. For example, they're not breaking up how many revenues are actually coming from, let's say, sales of accessories, how many sales are coming from, let's say, battery upgrades, or how many are coming from the rentals or second-hand usage and sales of cars. So maybe now that they're starting to actually mention some of these more distinct lines there in this other sales segment, maybe going forward they will give us more details on that. I would actually really hope that an analyst will be asking this question during the NIO earnings call, because I actually think that this could be a huge line over time going forward, parts of the business model here. Here's a comment about Norway sales. Exactly, they are quite small still. I've been talking about this in some of my previous videos, that actually NIO had some delays when it comes to the delivery center which they were building. I think it's only 1 month now that they're actually having a real delivery center in Norway. And actually since then we see also the daily numbers that you can track online increasing and ramping up a little bit. I think they should actually show a nice increase. And actually, I also would say they are doing quite well. For example, if you compare it to some of the Chinese competitors entering the space, like Xiaopeng seems to have some issues in Norway currently. Maybe they can exchange the management and find a better way of tackling it. But I just do think that NIO's brand here is actually the best Chinese brand fitted to be introduced in the European market. That's also maybe part of the reason why we see those large investments into marketing, into R&D, into new personnel, because of course they need to hire for all of this overseas expansion, and that will be costly. That is something which currently is affecting the financials here, but going forward at some point in time, there will be more continuity in there, and then also with the increase in sales that we'll see based on that, we should also see the benefits on the bottom line of the business. So that's still early. This is kind of the part of the time of the startup stage where NIO is in currently. You cannot compare it to a company, let's say like BYD, which is more than 10 years old, like Tesla, which is more than 10 years old, which are at a different timeline in terms of ramping sales, hiring employees, going overseas, expanding, and things like that. So it's really like investing in a startup here. NIO needs to get their margins up again. I totally agree with that. So that's maybe one of the worst parts of this report, which was kind of to be expected based on the shutdowns and all of the difficulties with new models ramping up, and the inflationary pressure, and the factory being shut down for some time. Going forward, I'm pretty sure that these margins will ramp gradually towards 25% again. But yeah, certainly this is not pretty right now in this report. And yeah, certainly one of those negative reports at the moment. Yeah, NIO looks a little bit better than XPeng and Li at the moment. That's true, Dennis. But on the other hand, I also don't like to compare those two or those three, as you know. While Li Auto has a similar target base, that's correct, but it's not an EV. And like for XPeng, I also don't like to compare them to NIO because, of course, they are really selling at a very much lower target price there. It's an entirely different customer base. Maybe with the ET5, we will see NIO coming down a little bit more, challenging, maybe also even an XPeng here. But I doubt it. I think XPeng is more really competing with the likes of BYD. Huawei, I just mentioned yesterday on Twitter, is also launching their own car, the Aito. At least it's backed by Huawei. These are the companies where we need to compare XPeng with. I rather really like to compare NIO to the German brands, BMW, Audi, Mercedes, which are actually having much more difficulties to actually ramp their sales for electric vehicles. Let me quickly show you one chart here, if I can bring that one up. This one I prepared yesterday, I think. Share screen, window. There we go, entire screen. So if you're watching the actual competition, which are the Germans, but I actually need to get their latest numbers. And excuse me, these are not polished slides here. But I think this is where we actually need to compare it to. If I find the chart, these are numbers actually ending by the end of 2021, comparing NIO in yellow here and BMW, Mercedes, and Audi, and their sales of EV cars in China. And you can see that NIO is much, much higher than all of them, each individual German brand here. And of course, you see also that the growth is flattening here in the last couple of quarters with NIO. So these are the challenges which they have been dealing with. But I'm getting more and more certain that this is now something in the past. But this is the competition that I like to compare it. I need to do the updated chart for 2021. But certainly, this is something where I rather see the competition for NIO. That's an interesting question. What do I think about the Huawei Aito and the HiFi? Well, China has very, very great competition, to be honest. Lots of new models, lots of startups. And yesterday, I saw the new launch of the Aito M5, if I'm correct. And yeah, I mean, like if you also look at the software, the Huawei Harmony operating system, this is really some good stuff, and it's compatible with Huawei cell phones as well. It's doing something similar in the future, possibly, than what Apple is planning with that the OS is not only going into their own cars, but might be actually adopted by other startups and manufacturers, maybe even some of those legacy brands and OEMs. So that's could be quite disruptive, to be honest. And yeah, those cars are certainly compelling and competitive. I do also think that there are maybe some issues in terms of manufacturing and the quality. So I don't want to, say that these are certainly going to be big. We still have to see. Production is hard, as you can also see with NIO. Prototypes are easy, but certainly the Chinese EV landscape is very, very competitive. And so I do think Huawei should be doing quite well for the other ones like HiFi and so on. I'm not so sure. They're quite niche. I think even XPeng might be running into problems there in the future, and maybe have to merge with some other companies there, as their margins are very low, and I don't see a clear path to profitability. Even you saw that today in the numbers with NIO. Their margins are challenged right now in those difficult times, but still they have very high average sales prices, and they have high margins in the end as well, and they have a real chance of getting profitable at 2024, 2025 if they reach volume and scale. But for the others, I'm not entirely sure how this should be working, to be honest. All right, let's see if there are some more interesting questions. Really glad the stream is working so far. Once again, I'm not at home currently. I'm on the road traveling. As you may see, I'm sweating today. It's quite hot here. Once again, if you're watching this is a live video cast about NIO's earnings right now. I appreciate if you subscribe to the channel, if you like it, if you share it. And if you're watching this later on, this will be also recorded on the channel. I'll be doing a separate stream about live streaming NIO earnings management call, where I hope we get a little bit more of a flavor about the actual margins and the cost developments and the outlook going into this year. All right, but so far it doesn't seem like there are many more questions. What do you think NIO with positive EPS, William Lee said within this year? No, that's not going to happen within this year. And I think also William Lee didn't indicate that it's going to happen this year. I think he once did an interview where he mentioned like, we're going to be faster than Tesla. So on a lifespan, I think Tesla took quite some years to turn positive. And for NIO, I think the latest indication that we had was by the end of 2024. That should be realistic. I previously assumed that they may actually be able to do that in 2023. As we've seen with the report also today, if there are uncertainties in the macroeconomic environment, like the lockdowns in China as well, this can certainly affect NIO's bottom line. So there might be still quarters in where NIO has to invest and where the margins are not that great, and this will certainly, be still some waiting time until the profitability turns positive and we see a sustainable break even. However, in the general setup, with the high average sales prices, with a very, very compelling product in my views, and being able to earning high margins in theory, once everything is on the new platform and ramped and scaling, I think gives this company high prospects to reaching profitability at some point in time. And that's, of course, what we are waiting for. Another comment by Joachim: would you say lower margins are related to increased spending on ramp-ups and battery swap stations, or due to the increased battery-related cost? Well, I think we will get hopefully even more insight in the earnings call by the management team. What they mentioned in this earnings release is they say it's twofold. For the vehicle margins, it's because of the battery costs being increased. So that's because of inflationary pressure. And the second one, regarding the gross margins, also has to do with marketing spend and including the build out of the infrastructure, also battery swap stations. And as I've mentioned, I think there is a little bit of a time lag off. Actually, in the past, 2021, in that Q4 quarter, we have seen a large increase, more than 200 battery swap stations being built. And I think these costs are trickling down over time now. I think going forward, as they're now having reached a certain number and maybe scaling down also on the actual increase of battery swap stations, or maybe keeping it at 100 stations per quarter right now, I think we should also possibly see those costs even out a little bit more over time. Hey, Freddie, thanks for tuning in. Seems like you've been a little bit late to the stream, because I mentioned already when walking through the actual report that NIO has just said they have $8 billion in cash. Currently, well, yes, they did burn more than 400 million this quarter, it seems. But as this was one of the worst quarters, I would say, looking back, in terms of the profitability or cash being spent, I think going forward, there are not high chances that they need to raise additional cash. Hopefully, well, there could be negative surprises, and maybe they even say that they need to invest even more in R&D, and maybe they become even more aggressive in building out infrastructure. We'll see how going forward, like let's say Q4 or the Q1 2023 will be interesting to watch, where we get a better view, like how the margins will be looking once volume is higher, once everything is more like in a normal modus operandi. I would say currently they are not, with all of those interferences of lockdowns, shutdowns, and launching new models. That's quite of a irregularity. It's not a normal quarter, to be honest. All right, I think we're 40 minutes into the stream. I think I'll take a break here and come back in, I think should be roughly an hour, in which we will see or can listen together to the earnings call. I will be live streaming that once again, if the internet permits, and hopefully can cool off a little bit for now. Thank you guys for tuning in, and see you later on.